So on this episode of the Create Podcast, we are on location. We are in Riverside at Locke Your Loan. I'm actually in Laura Locke's office. She is one of the preferred lenders that I work with in my real estate business. And we're about to transform her office into our podcast studio because for the next few months, we're taking the podcast on the road and we're going to local businesses, people that have created something like Laura has with this company, and we're digging in and hearing their story and finding out how and why they did what they did. So we're going to set this up into our podcast studio, but check out over the next few weeks, we're going to be all over Riverside and all over the Inland Empire telling the story of different businesses.
This is the Create Podcast.
All right, awesome. Well, thanks for letting us come out to your office.
Absolutely, anytime.
Way out here in Riverside so far. So obviously really excited to this series of our podcast. We're basically taking it on the road and different people within Riverside and the Inland Empire. Obviously the theme of our podcast is the Create Podcast. So people that have created something, so businesses and products and service. I love talking to entrepreneurs and people that have a creative, I love when you see like the creative side and the entrepreneurial business side come together.
Yep.
And I think you've done that exceptionally well. So
thank you.
I'm excited to come out here to your office in Riverside. But I want to talk about, obviously going into real estate myself, like it was excited for this conversation to talk about the market, and it's obviously crazy right now and it's changing on a regular basis. So I want to get into that, but kind of wanted to start to just your background and how you got into the industry and how that all started. So love to hear it.
So I actually think you can't go to school for this industry, right? The industry kind of chooses you. It sucks you in. I was 17 years old. I was going to UC Riverside. I needed a job. And so one of my dear friends at the time, Amy Quigley, actually had a loan officer as well as a real estate agent that needed an assistant. So I popped in. It was one of the 2 or 3 jobs that I had while I was in college. And that's how I started. The first day they gave me a rate sheet, and I was going to school for economics. So the first day they gave me a rate sheet, it kind of quantified some of the things I'm learning in school at the time to what the actual market, the interest rate, the interest rates, how it correlates to the bond market and the stock market. So it caught my interest almost immediately.
Yeah, I could see that. It's, and I feel like I'm experiencing this for the first time in my life, like as old as I am now, when you find someone that is doing something like they're supposed to do, like you could just tell, you know, like there's people that are good at stuff. You can see someone like he's really good at what he does, but I think there's a difference when you see someone like, oh wow, that's what they're supposed to be doing. And I could definitely see that with you.
You know, it's so funny that you said that. And back then interest rate sheets weren't digital. Like it was a hard copy that came out every single morning. I still remember to this day the exact date and the exact time that I saw this interest rate sheet. It was almost like light bulbs went off in my head. And so, you know, at the time I met my high school sweetheart when I was 15. His last name is Locke, right? And I was 17 at the time. I had no idea that this was going to be my entire life. And so not only did I fall in love with it that day, but I also married a man with the last name of Locke. So it's the you know, stars came together.
Yeah, that's amazing. So what was like your first, like once you got started, what were you doing? And then what was the transition obviously to now having your own company?
Yeah. So I really need to put emphasis, especially for those getting into the market, getting into the industry. You're going to have to put your paces in first. You know, obviously I was 17. So at the time I was doing grunt work. I was, doing showings for real estate agents. I was TCing. There was, you know, a lot of things were different. This was, you know, the late 90s. Things were different back then. And same thing on the loan officer side. I was just learning what a bank statement was. I was 17 years old, right? I was just learning credit and this, that, and the other. And this is back before anything was digital. So probably a solid, 5 to 8 years really learning the business and really screwing up right and left. It wasn't till the market, I graduated in economics in 2006. We decided to move out to LA at the time. I actually went to work at Wells Fargo. I watched the market crash on TV at Wells Fargo. And it was at that time that I looked at my husband. We decided to have another baby, expand our family to 2. And what better time to start a company from the ground up than at rock bottom?
Yeah.
Yep. So when I started it, this is back before things became paperless. I actually decided to start a paperless company back in 2008. So.
Okay. And did you grow up in Riverside?
Yes.
Yeah. What high school? I think we already had this
I
conversation.
actually grew up in Reno Valley, so Valley View.
That's right.
Yep.
So it's about 2008 then when you started.
Yes.
So a great time. It's interesting too because I mean, obviously there's some similarities to what's happening now, but in a lot of ways I think it's the opposite of what happened then. So it's very different. But in terms of it just being out of the ordinary and normal,
definitely out of the ordinary. Lots of differences, especially looking at the perspective of lending. It's astronomical amount of differences. Definitely appreciation of homes, the value of homes kind of going up the same way, but not nearly as similar with how people have to get qualified. I mean, when my husband and I were 18 and 19, we bought our first home and it was stated income. We still own that home today, but there was a lot of people that bought and sold homes back then that had no business doing so.
Yeah. What are you seeing now in terms, like, in comparison to obviously 2008? Like, most of the people I hear, most of the people I talk to and experts are, like I said, I was listening to someone this morning who was saying that in so many ways it's the opposite of what was happening then.
Yeah, it is the opposite.
Yeah.
So
how do you see that?
Yeah, so let's talk about the lending perspective because that's where 2008 all started from. Is you had very loose lending guidelines. Anybody could easily get a mortgage. It was literally, I mean, we would joke, you just have to walk in the office and sign your name at the dotted line and you could get a home as long as you had a certain amount of money in the bank. And even then, it didn't even have to be that much money in the bank. Well, back in 2008, the government came in over the next couple of years and actually has a conservatorship over the mortgage industry. And so they came in, had an assembly of people write different guidelines that we had to adhere to. So if you look at the past, 50, 60 years, the majority of your clients were maybe 620 to 650 FICO scores. Now the majority of our clients are 680 to 700 FICO scores. So already you have a higher amount of FICO scores, people that have better credit history than what they were before.
Yeah.
On top of that, you have to have a 2-year job history. You have to have money in the bank. And we always tell our new clients, we're going to look at all of your documentation. We're going to take a clipping of your hair, your big toe, and probably your first child. So nobody loves doing mortgages anymore, but these are the rigors that we have to go through to get you qualified.
Yeah.
So you have highly qualified individuals right now, and a lot of them are not pulling money out of their homes. Before, people were pulling money out of their homes to buy boats and cars and, just go buy another home, this, that, and the other. That's not happening now. So we have highly qualified individuals out there, which is exceedingly different than where we were before.
Right, because even if rates go up and things get turned upside down, we have quality loans. And so it's people that, even if they find themselves underwater in a year or 2 or 3, they should be able to afford their payment and stay. Yeah. They don't have to leave.
They don't have to leave. It's very steady. And even with COVID coming on, when COVID came on, guidelines were changing. They're called overlays, where it's like a quick change to a guideline. You make it a little bit stricter. With the unemployment rate going up, lenders out there across the board, it was like effective immediately. You had harder guidelines. Anytime unemployment goes up, then you risk not being able to make your mortgage payment. So the investors out there were like, whoa, we need to really make sure people are qualified just in case they lose their job.
Yeah. What's been your perception on the low inventory? I've heard, people talk about the number of millennials and like statistics, like 1 million more babies born per year, like in the late 80s, mid 90s. And that one being the contributing factors where you have all these new first time home buyers and then builders obviously not building as starting, 2008, 9, 10, 11, cutting back. And so what's been your perception of what's contributed to the low inventory that we're seeing?
So, of course, being in lending, my perception is of the lending. This all happened during COVID. When COVID came in, the Federal Reserve came in some really strong monetary policy that helped get our interest rates where they are today. Anytime you have low interest rates like this, then you have higher buying power. So you had a flood of people going in, as well as a lot of investors, people that are leveraging it. So you have a $400,000 loan at, let's say, 4.25% interest rate. That's a $2,000 payment. You have a $500,000 loan, so our prices are higher right now, but you have a 2.875 interest rate. That's a $2,000 a month payment. So you have $100,000 more in loan purchasing power. But on top of that, over the life of the loan, you're going to save $100,000.
Yeah.
So not only do you have higher purchasing power, but it's a savvier investment. Even if the market is higher, which we are right now, to buy with the interest rates as low.
Yeah. So if you're talking to someone, either say someone that's in a position where they're thinking of selling their home and buying someone else, and they're buying something else, they're probably hearing all different advice from different perspectives.
Oh, yeah.
But what do you say to someone that they're looking at their house, they know they have equity, they want to sell, maybe they want to upsize or downsize for whatever reason, but they're just not sure, should I wait 6 months, a year, 2 years? What are you right now saying?
Well,
that
it's
person?
twofold. One, I'm very realistic. I don't oversell people on this market. This market is a seller's market. You are going to pay over and above what the home is worth.
Yeah.
And I will tell them that, hey, the way, even at normal appreciation, in about a year to 2 years, you will already have that return on investment. So that's number one. Number two is I actually think this is a great time to sell and buy, especially if it's called top grading, when you're selling it to move up because the interest rates are so low.
Yeah.
And it's just a savvy investment when you get an interest rate as low as you are. In terms of an investment scale, anytime you have an interest rate under 4%, that's a great interest rate. Your money could be better spent putting it in the stock market and earning money on that and putting as little down as a home.
Yeah. Yeah, because you have people, maybe it's a first-time home buyer, someone that hasn't purchased a home yet, and they're thinking, well, am I going to overpay for something now? But the reality is as soon as that house on that street sells, that's the new price.
Yeah.
So you're basically paying now what that's worth.
Yeah.
So
yeah.
So how do you typically, if you're talking to someone that's coming, like first-time home buyer from that perspective, how else would you put that to them in terms of the numbers and what that's going to look like for them down the road?
One of the first things that we're going to talk about is we're going to talk about what it is to buy a home, what that means for your long-term investments.
Right.
How real estate, no matter how many business cycles, so the average of business cycles appreciates. So it earns money 6 to 8% of the value each year. So we're going to talk about that for a first-time home buyer. The other thing that we're going to talk about is the potential tax saving you're going to have. And then again, for the first-time home buyer, we talk about the rent factor. So if you're paying $1,000 of rent a month, that's $12,000 per year that you're paying to somebody else's mortgage. Where if you had your own mortgage, it's like a forced savings. You're putting $12,000 to your own mortgage. So right there's three things that I'm going to tell the first-time home buyer. There's a benefit. On top of that, we have interest rates as low as they are right now. So with the interest rates as low as they are right now, they will gain that much more equity in their property. They won't have to pay that much in interest.
Yeah.
Typically speaking, a $100,000 home, you could pay $200,000 in interest over the life of the loan. It really all just comes down to your interest rate.
Yeah. What are one of the most interesting things of being in real estate and working with buyers? And obviously for me, being out of California, moving back to California, and I feel like as I moved to California, I was waving at everybody going the other direction out of California.
Still are.
I know. I'm actually I think it was my dad this morning. I was talking to him. He was an agent in the past, and he studies real estate as a hobby just because it's fun for him. And they were going out to Palm Springs. They went past Beaumont, and there was a big billboard that said, thinking of leaving California, we're your local relocation experts. So as a real estate agent, had a giant billboard. Yeah. For people considering leaving California. But I'm curious, what do you think are the possibilities of what's going to happen to the market, like a little bit more long-term in terms of with so many people leaving California, so many businesses leaving California? I'm curious in the next 2, 3, 5, 10 years, what that could do to our market here.
I definitely think it will settle. We are getting a lot of individuals leaving. I would say of the, 50, 60 people that were qualifying each month, I would say at least 5 of them are moving to Arizona or to Texas or to Idaho or to Nevada.
Yeah.
I think it will settle down. California has, not only, of course, we have the federal taxes, but we have the state taxes. And so a combination of the two of them hurts pretty significantly.
Yeah.
So
we're fortunate in that way.
Yeah. Fortunate. Yes, totally. But there's a lot of value to California. One thing, especially in Riverside, that I love, it's an hour to that. Have you seen the TikTok challenge, like the Southern California challenge? Have you seen that yet?
No, I haven't.
So the Southern California challenge, and it's kind of viral on TikTok, is you wake up in the morning and you go to the desert Joshua Tree and you watch the sunrise, and then you drive an hour to Big Bear in the snow and you go sledding, and then you drive an hour to the beach and watch the sunset at the beach.
Yeah,
we have this wonderful location, especially in Southern California, where you can do that. And I don't think, is there really any other state out there that provides that type of
There's
fun?
not. No, that's funny. I haven't seen that yet. So I went to North High School, and we would, in Riverside in high school, we would go either snowboarding in the morning, a half day, and then we would go to the beach. So we didn't do the desert, but we used to try to do that all the time.
The next time it snows, if we have a spring snow, I'm going to get up and do the Southern California challenge. It's going to be amazing.
Yeah. I think a lot of it is hype with people moving. What you said, I agree. I think for the most part, it's going to kind of die down a little bit. That there's been some famous people leave the state, and I think there's a little bit of hype to it. But I mean, like you said, there's the weather alone. Like, so I've lived in Texas, I've lived in the Northeast outside Boston, I've lived in the South for a number of years. So I've at least lived for a decent amount of time in the different major parts of the U.S. And there's nothing that obviously that's preference and people have different preferences, but there's nothing that compares to the weather and the accessibility.
And there's anything that can change within California to draw people back in or to push them out quicker. So it's very hard. Yes, if we stay in our current pattern, sure, 10 years we're going to lose more and more seats, and it will get a little bit worse. But I think that's really hard to predict. Yeah,
for sure. What I'm super hopeful for Riverside too. Like
I love Riverside.
When one of the things, I've talked about this on here so many times, but when we came back, we had handful of friends that are still in Riverside, grew up here, and most of them that were here would say, "Why did you come back to Riverside?" And two, I think it's just perspective and having a different experience and coming back. But I have such hope for Riverside, and I love when I find someone that has that same feeling and insight I feel like it's really just beginning to even experience its potential.
You know, it's so funny. We moved away after I graduated college. My husband, John, and I both went to UC Riverside. And the same time I graduated, which is the same time he got a promotion, we actually moved out to LA for about 7 years. My oldest son, outside of, all the way up to high school, went to school, pretty much elementary, middle, all of that went to school out there. And so when he came back and he was like, man, we're living in Riverside. Like, I want to go back out to my friends in LA. And so he was very much, when I finished high school, I want to go back to LA. Well, he's 2 years. He's a sophomore at UCLA. And now he's like, man, I really miss Riverside. Like, people don't understand how different Riverside is. It's just a gem. There's so much we can do there. There's so much history we have. There's so much culture. You just go even to the Riverside Food Lab, and it's just so much fun. It's a different vibe, a bunch of good people around here.
Yeah, I think, like I said, I think it's just beginning to see its potential, and I don't know what it is. I mean, I'm super nostalgic, and so for me, growing up here, that's a big part of it for me. But I believe it's so much more than that. Beyond that, it's like there's something in the DNA of it that's just very, very different.
I mean, my favorite time of year here was just recently. I'll open this door in the spring and you can smell the orange blossoms. Literally one of my favorite smells in life outside of puppy dog breath is the smell of those orange blossoms. It's a treasure just to be near.
Oh, it is. I went to Emerson Elementary over kind of by UCR over that area. And it's like, it used to be orange groves all around that.
Right.
And when I came back 2 years ago, it was about this time. And I don't think I had smelled the orange blossoms in probably 15 years. And I was like driving through and it hit it. And it was just like a flood of memories too.
It's an amazing thing. It's the same. On the last year, I was super homesick when we were out in LA, and it was the same thing. We came back and the orange blossoms were alive and fragrant, and oh my God, my husband and I just wanted to park the car and just sniff our way through town.
And I think too, with so many of like the buyers I've worked with and talked to already are millennials coming from LA. It's like, I grew up in Orange County, or I grew up in LA.
It's huge right now.
Or maybe their parents grew up here and then they moved out there at some point. But so many of them are in their 30s, late 20s, early mid 30s, and they're coming out this way. And I think I think just their perspective too on things, and they're having more exposure, I think, to more art and culture out in that area. I think it's going to even nurture more of that here.
Oh,
as
it
well.
definitely will foster that here. And the reality is a $800,000 home out there is a $500,000 home here. And so there's lots more potential for first-time home buyers to come into the market. And some of the architecture from mid-century architects, or driving down wood streets, or pick a pocket in Riverside, and it's a whole different feel to it in terms of the style of homes.
Yeah, it really is.
For sure.
So what's your prediction the next year or two, like with the market? Like what's going to happen with, I mean, we hit it in different layers, but just like interest rates, what are you foreseeing?
Yeah, so this is something I study because my background is economics, and thankfully I landed in a field where I get to use it a little bit. So I'm looking at economic reports constantly right now. The death hammer really for interest rates is inflation. So a lot of the inflationary reports that we look at were really low this time last year. And when you're looking at any sort of reporting, it's going to look at a year-over-year averages. So inflation last year was, in some reports, almost at a negative, right? The economy just shut down. Well, we're not anymore. We're opening back up. So I do fully anticipate, we had an economic report that just came out yesterday showing that inflation is coming. It's on the rise, but I actually think at the end of May, beginning of June, like the start of summer, you're going to see interest rates really start ticking up there a little bit, and a little bit more volatility in it.
Yeah.
And I think probably towards fall, again, it'll settle out. But the reality is we can't have interest rates this low for too much longer. We do have to go back to a little bit higher of levels. So before last year, this time, we're about 0.25% lower than we were last year. But about 6 months before that, we were in the 4s. I fully anticipated by this time, 18 months ago, forecasting, just like you said, where do you think it's going to be in 2 years? I fully anticipated for us to be at the 5 to 6% range in interest rates. Yeah. So this is definitely a blessing.
Yeah. Which just goes back to that it really is a great time for someone to buy, because it's, who knows when we're going to see that again. Yeah. And for them to be able to lock that in, especially a first-time home buyer.
Yeah, whether it's a first-time home buyer or a seasoned home buyer, one of the things I'm doing with a lot of my seasoned home buyers is, instead of putting 20% down, I'm giving them a scenario to put 15% down or 10% down, and that other 5 or 10%, I want them dumping it even just into the S&P 500. So what we're really trying to show clients is, real estate is one form of investment, but we're looking at the entire wealth category in the long term for you. Yeah. How that looks, how much extra money you could give if you leveraged your house a little bit more and invested on a different scale. Yeah. So it's a good time.
So with the overall market going into next year, what's your crystal ball tell you the next couple of years?
So there's no crystal ball is one
I thought you had one.
Yeah, no? I wish I did, man. I speak to a few economists monthly. I have quite a few dear friends that are high producers across the nation, some of the top producers in the nation. And we are talking every 2 weeks, monthly, just to figure out what's happening across the nation. Interest rates, of course, are the same across the nation, but what's happening, the seller's market is at the same time it became a seller market here, it was the same time it became a seller's market on the other side of the country. Yeah. Crystal ball being eventually they're going to pull back from monetary policy. One of the monetary policies that they've been enacting is buying mortgage-backed securities and buying them weekly, which has been helping to keep our interest rates as low as possible. Yeah. As most of you know, prime rate is also very low at 0. Prime rate doesn't impact us in interest rates as much as everybody thinks, but it's also part of their monetary policy. I think as the economy gets better, as unemployment gets better, you're going to see the Federal Reserve pull back from that a little bit, and things will start to stabilize. Yeah. So in 18 months or so, I fully anticipate interest rates starting to rise. I really do hope at that time that more sellers come on the market and inventory opens up.
Have you seen, I have a similar situation where us doing what we did in real estate out in North Carolina, and then our magazine, we're in about 100 markets. And so I know the publishers in all those markets. Yeah. So maybe at least to hear a little bit from secondhand, what's going on,
It's
and you have those
interesting.
relationships.
Oh yeah.
Are you seeing it's pretty much the same across the board?
No, it's not pretty much. It
No,
is
it
the
is,
same
yeah.
across the board. And, it'd be so fun to be in college right now to do an independent study just on this, how the nation, of course, we all went on lockdown, pretty much at one time. Each state, each city kind of did their own thing. But it was like a group think across the nation where, of course, everything shut down. But all of a sudden, we had all these buyers in the market. And all of a sudden, we didn't have any sellers. It swept at the same time, like the snap of a finger, across the nation. Now, what I'm curious about, if it's going to slowly evolve out of it, or if it's going to be a group think across the nation that just comes out of it. And that's the part that I think would be really interesting to study.
Yeah, for sure. So I love, obviously, we were talking about at the beginning with what you've been able to do with your company of really just bringing together the artistic, creative side and with the entrepreneurial business side.
So that's a
did
little
you have
kismet.
Did you have that from the beginning?
God, no.
Or
I'm a numbers person. Like, I'm totally a numbers person. So I was a ballerina growing up.
Yeah.
Definitely have an eye for at least a little bit of an artistic sense. But no, kismet happened. I really was looking for somebody to help me with my marketing. I had no time to do social media. I couldn't do a website. Like, how do you run a business, do mortgages, prospect, build relationships and everything else? So I was on the hunt just for someone to help me out or give me some sort of directionality. And it just so happened one day that I met the girls from Bruiser Union, and we hit it off almost instantly. They understood me, I understood them. And so we started working together almost immediately. And then our businesses kind of evolved and combined over it. So very blessed in the fact, and a little bit of fate, like I said, took place in that. But it took the artistic sense of it, and it mixed with the business sense, and it just started rolling very quickly. I mean, literally the first moment the three of us spoke together, it just started rolling very quickly from there.
Yeah, you guys have done a great job.
Thank you.
It's interesting too, because like being just on the outside of the real estate industry for the last 6 years and working with so many agents and getting to know them and telling their stories and really digging in on a relational level and figure how did you do this? And one of the things that we heard over and over and that I was able to see was that just the people that are successful, or there's it's a recipe and there's a lot of different ingredients, but one of the things was just the ability to be very just have a level of integrity and honesty and communication.
So my number one value, that I hold most dear, is do what is right, even when no one is looking. Like, it is absolute forefront. Everybody on my team is ingrained in that value.
Yeah. But it amazes me, and now being in it and jumping in the deep end like a cannonball and really being in it and seeing it, it amazes me how obvious that is for success. And how often people don't do that. Yeah,
I mean, I think there's no get rich quick, right? It's a process. Success is a process.
Yeah.
I saw this meme once, and it's like most people think success is a straight line, but in reality, it's chaos. It's all over the place. It's squiggly. It's chaotic. Keys for success, we already touched on, have integrity. The other one is work.
Yeah.
You got to build something, you have to pound the pavement. You got to pound the stone. You got to put your nose down and grind. That means early mornings, like 4:45 in the morning, 5 a.m. You get up and you have a ritual. You get up and you ride your Peloton. You get up and you do yoga. You get up and you write in your gratitude journal. I start every day writing in my gratitude journal. I'm giving myself 5 things that I'm grateful for from the day before. And then I'm writing 10 things down, the same things that every single day, 10 things down that I want for myself, to be present with my kids, to empower the women that work for me over and over, to be a better cook. My passion is cooking. And I think not only does it start your day on the right foot, it cements the positivity in it, but you're constantly going towards that goal. The other thing for me is you have to adjust and redo your business, refine your business, and implement quickly.
Yeah.
Is just as much as, when a new client comes in, you want to take care of them as quickly as possible. You have to look at the economy around you, look at the world around you, and move at a faster pace.
Yeah. That's the one thing, because basically a lot of what you're saying is just being intentional and
yeah. So I can tell you the moment I doubled my business was the moment I learned how to time block. It was almost overnight. So when you're intentional about the things that you do, then you can be very strategic and move your business and shape it the way you want. For
sure. I think it's like this in just about every industry, but anything real estate related seems to be true across the board, where when I look at the most successful people, I can't find anyone where it happened by accident or it happened from external circumstances that they just stumbled into. I think there are industries where that can happen.
Of course.
But anything real estate related, that's absolutely not the case.
Yeah, no, with business, with anything really involving anything, you have to look at the big picture, but also zero in on the details. You have to master those basics and zero in on the details. So that means different things to different people. For me, mastering the basics is just having themed calls, themed things that I'm doing Monday through Friday, and then zeroing in on the details to me is tracking everything about what we're doing, from, understanding my books all the way down to understanding to a very granular level how my business comes and where it comes from. So it'll forecast what's going to happen for me or what I need to do differently.
Yeah, it's so important. And I've seen already too, like from my perspective as a real estate agent, how important it is the people that I'm working with, and through it's funny because I've been on the other end for so long where essentially a part of what we did was sell advertising in the magazine to vendors, to lenders and home inspectors. And so for forever, I have this sales pitch of, it's really important, the vendors, that real estate agent. And I've said that probably hundreds or thousands of times. And I believed it, not that I didn't believe it, but jumping in and so quickly and realizing like, wow, that was even more true than I realized.
Right. And I think once you define yourself, once you get granular, really work on a business plan, then you can define your own style in it. For me, it's a little bit girly. I'm not going to lie. I'm super proud of it. I was a ballerina growing up. I like pink and red and just prettier things. I like fresh flowers being delivered weekly. But you can infuse a lot of your business with what you like, your own style, your own brand. Yeah. And I never truly realized how important branding is.
Oh, I know. It's so important.
Oh, my. And you know what? It's so much more than what most people think. There's so much to it. There's 3 to 4 people constantly working in marketing and branding in this office. It's a constant thing.
Yep. And it has to be intentional. Like
exceedingly intentional and exceedingly consistent. Yes, absolutely.
But it's so, going back to it just being so important. Like I've already in a short period of time, like I've been working with you and clients, and actually going today to David Herman's to get keys for their house. Yay. But I've had, another situation I'm working with another lender that they brought to the table. And just, I was like, wow, this is a much different experience than working with Laura and her team.
I mean, you have to understand, I've been in this business for 20 years. Yeah. I've done a lot of stupid mistakes. 12 years ago, one of the bigger mistakes I think in my career is I ordered an appraisal on the wrong property. You never do that again. Right. So I've done my licks. I've refined my business. I've started a team, and yes, I do mortgages, but I've built a business now. There's just so much more than mortgages. It's creating the process. I'm actually obsessed with the process. I'm obsessed with taking an idea and writing it down over and evolving it, writing it again over it. I have these huge Post-it notes. They're like 2 feet by 3 feet that I've literally littered like a little golden road and wrote out our process over and over. Sheila will come in this morning and be like, what are you doing, buddy? What are we changing today? So it's more than just mortgages. And you can always tell a new loan officer coming in. And there's a couple of loan officers out there that I know are new, and I look at them and social media and see what they're doing. And I think it's phenomenal that they're constantly putting themselves out there the way they are.
Yeah. I think one of the things that is different about you guys is that it's very obvious that you're not just passionate about what you're doing, but that you love what you're doing.
I love what I'm doing.
And I think that's what makes a difference. Yeah. Like another home that it literally, I thought it was dead. It fell apart because basically the lender made a mistake. And it was very obvious. It was just the opposite experience in working with you, and that I could tell she didn't really have much passion or care for what she was doing.
She probably just didn't have the knowledge behind it. So there's a difference there. If you don't have the knowledge, then you're going to give up quicker because you don't know another way.
Right.
I'm that why person. I feel bad for the underwriters that always got my call of why. Well, I still don't understand. Explain it again. Why? And I remember it evolving to me just constantly asking the why questions. And I'd have to preface it. I'm not trying to be rude. I'm just trying to learn. I remember to the point where I would get a disposition from an underwriter and then I'd argue it. That's not correct. Here's why. So there is definitely a switchover. It takes time to get there. So for any of those individuals out there, whether you're real estate or lending or no matter the field, it just takes some time. I think something else that's important in this industry, or at least here in this office, is we're constantly learning. So every morning we have about a 30-minute team meeting. Yes, we're talking about every client we have. We're talking about whether they're in contract or out of contract. We're talking about them constantly. But we spend every single day of the week training on something. We talk about the mortgage-backed security market daily. We're looking at the 10-year bond. We're looking at the S&P 500. We're doing stock simulations here. We're investing in the market. So and I have 12 people on my team. My girls know what it means to invest. They know how the market moves. They know the economic reports that are coming out next week and how they could influence. And there's sometimes in here where I'll yell, everybody stop what you're doing, and we're going to lock in as many loans as possible because we see a shift in the market and we want to capitalize it. Yeah. So we have a lot of fun because of it.
Yeah, I can tell. And I think one of the things that drives, or anybody, you guys, pushes you to do that is to stay current, to stay educated, to stay on top of it. I think it's the passion and the love for what you do.
It's definitely the passion, the love for learning, always trying to figure out the next step, just to try to figure out something different. Like last night I was on TikTok, and I always have these TikToks where it's people like playing with Excel. And there's one, her name is Miss Excel, that I came across. She's adorable. Like she has this whole program, whole seminar built out for different things that you can use Excel with. And I don't care what industry you're in, Excel should be a vital part of tracking. Yeah. And even me who, I'm not an expert at it, but I'm pretty good at Excel, was like, I should just take this class just to learn a little bit more, to increase my business a little bit more. Or there's a professor out of the University of Maryland that looks at the analytics of social media, not just the, what age group, what demographic, but it's diving deeper, like the overarching, like how social media picks up on certain things and the AI involved in it, getting in that and understanding that. I like to touch it, taste it, feel it, everything that we're doing. It's fun. And I think everybody here in my office feels the same way.
Yeah. Well, it's obviously from the agents that you work with. I think even just the people on social media that follow you and see the stuff that you guys put out, there's a reason that you've been so successful. And you guys are about to expand, right, in your office?
Yeah, I know. It's kind of exciting. We're in the last of the negotiations. So we are going to 4,500 square feet. It's 2 stories. We're 16 offices. Yes, we're definitely expanding little by little, day by day.
So are you going to be hiring as well, bring on more people?
Yeah. So I'm definitely going to be the front of the house, the back of the house, just different parts within my team. And then I haven't really started recruiting loan officers first. My theory was I wanted to get my process fully dialed in. And then what I wanted to do is take people on my team, those that wanted to, and train them up how to be a loan officer. So we've got 2 or 3 at my team that are training up for that right now, because I wanted to teach them the right way how to do things, the right way how to talk about a mortgage. And then there's a couple people that I would love to bring over to the company as well. Yeah. We'll get there.
Awesome. Well, thanks so much for just letting us come out and do this.
Absolutely.
But thanks for helping us get that deal done.
Oh, yes.
It was fun. Beaumont. Yeah.
Yeah.
Thanks so much.
Thank you.